with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across this great country. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come, trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, April 26, 2024. And let's just jump right into the numbers. Markets actually had a good week this week. So the Dow Jones coming back a little bit, up 0.6%. The S&P 500 up 2.6% this week. The NASDAQ composite, your tech stocks, up 4.2%, and the Russell Small Cap Index up 2.8% on the week. So all across the board, everything rose. But let me tell you, it was a lot of work to get here. I mean, you talk about a roller coaster ride this week. The market was all over the place, up, way, way down, back up again. I'm actually pleasantly surprised that it clawed out a positive week this week, but I think we can get a little more of that. We'll talk more about broad market movements here in just a moment. Let's talk about some more details here. Volatility index, that came down a lot this week, down 19%, all the way back down to a 15. Long-term bonds, as measured by the TLT, down 1% this week as rates drifted a little bit higher. And when we take a look at all of the sectors, technology up 3.7% this week. And within that, the semiconductors, which were getting clobbered there a few weeks ago, up 9.2% this week. So massive comeback for those companies. And everything else, up 1 to 1.5%, pretty much across the board. So it's very broad, wide move in the market, not very confined to one little area or the other. Everything did pretty well this week. So defensives, more growth-oriented things, it all did pretty good. And then taking a look at the metals, gold was down 1.9% this week and silver down 3%. So what's moving markets? Well, mainly earnings. Earnings reports have been moving markets. And of course, there's been inflation concerns and conversations that have knocked the market up and back down and back up again. So that's been really what's been moving things. And this was a huge week for earnings. I think 38% of the S&P 500 actually reported earnings this week. We saw it take place within our models. We have Facebook, which got clobbered this week. They reported a good quarter, beat on the top and bottom lines, but they have projected an increase in spending for artificial intelligence moving forward. Market didn't like that. It dropped 10% on Thursday, but that's okay because we sold a big chunk of it for $494 back at the beginning of March. So we trimmed it back big time. It's actually one of our smaller positions in the model at the moment, and it's back down to $440. I like to see it maybe drift a little bit lower. I like to pick it up closer to where it gapped up back into February into March, around maybe a 385, 395 level. So I'm watching that one. On the other hand, you had stocks that really moved higher. Google, Alphabet, they reported today. That stock was up 10% today. We also have that in the models as well. So, you can really see the divergence here as far as stock prices are concerned when they're telling what the market what it wants to hear, good news and good news looking forward. That's what the market really cares about. They don't care so much about what you just did. What are you going to do? And if the story is good moving forward, the market's been rewarding companies pretty well. And if it isn't, they've been getting punished pretty severely. So we've seen a pretty extreme as far as outcomes are concerned between one holding to another. I will say overall earnings season at this point in time, I would give it a B minus maybe. I don't think earnings have been that great. There's been beats, but you look at the number of companies beating, the percentage of companies beating, and the amount that they're beating by, we've certainly seen stronger time periods than what we're having at the moment. But there's nothing that's been said or that's happened that has knocked the narrative off course. I still think things look pretty good. We did have a GDP number this week that was much lower than expected. It was expected to be in the twos. It was like 1.6. Market Had a little bit of a bellyache over that one, but that's okay. I think the economy needs to cool a little bit. The question is, does it cool so much that we slip into recession, or just does it cool enough that inflation calms down a bit? And then we had a PCE number today on Friday. It was a tad hotter than expected, but again, I think the market took that in stride because it wasn't crazy hot. It wasn't really out of line. And I think it was only like a tenth or two, and the market seemed to digest that pretty well also. So we did a lot of buying this week on Thursday morning. Thursday morning, the market was just getting slammed. I mean, clobbered. I mean, the Dow Jones at one point was down over 700 points. The S&P, Dow, NASDAQ, they're all down 1.5 to almost 2% in a day, or at least in the morning. So looking at that and some of the technicals I've been monitoring and following, I just didn't want to let some of these things get away from us. So I jumped in and I bought the biotech index. Been watching that one for a while. I think I mentioned to you a while back. This is the XBI. It's a little bit more of an aggressive biotech index, but we were able to pick that up around 81 and change. So got in at a good price on that. It's already bounced up quite a bit. It's like 83 and change. We also, for the income models, for folks that are taking that check every month, I picked up Pfizer. Pfizer's just like, it's down at a price that it was at back in 2016, 2017. Technically, I have to say that it doesn't look super attractive at the moment. It hasn't really made the turn yet. Sometimes you look for that turn to happen first before we step in and buy something. But what I will say is every time it's come back down to where we bought it yesterday, it has held and bounced. So it looks like it's really got a strong level of support here and kind of forming a bit of a base at this level. And it's paying a dividend over 6%. So I'm like, even if it's not quite over yet, it's got to be pretty doggone close in my opinion. And we can collect 6% while we wait for that stock to kind of right course and start heading the other direction. So we picked that up on Thursday. And we also added to the small cap cash cows index on Thursday morning. These are the top 100 most profitable small cap companies out of the Russell 2000. Look, there's other things I want to buy, obviously, but I don't want to throw it all in just yet. I think that talking to some of the technical analysts I've been speaking to, it looks like we may have formed a bottom here in the market this week. That said, we may get a little bit more of a rise here, and the market's likely to go back down and retest that. So I'd expect maybe the market to lift a little further, and then I expect this probably go back down and retest. So we still have some cash on hand for when that happens. And if and when that happens, we're going to jump in and put that money to work. Because again, I think overall things look pretty solid at the moment. And there's a couple of things I like to pick up and buy and put into the models. So that's what's going on. Next week we got more earnings, but the bulk, the heavy lifting was done this week. We got a couple other companies, big companies still out in our future though. Apple's got a report, Nvidia's got a report. They're almost a month from now, but there's still some things in the future that could shake markets up a bit. But I think for the most part, things are holding together pretty well. So with all of that said, between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money, maybe it is buy a new boat. It is fishing season. I caught a massive 30-pound black drum right off the dock a few weeks ago. Maybe it is retire a little early or just flat out retire, take that big trip. You know what your goals are. Don't just think about them. Think big, like buy fish. Think real big. Think big. We'll talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.